For those of you who don't know who I am Jim Cagnina. I'm the Senior Education and Training Specialist at NinjaTrader. And there's my email address there as well. Thank you for coming today. We're going to be all about this micro crude oil futures contract that's been issued recently by the Chicago Mercantile Exchange. Margaret says, Jim, I have relatives in Danville, Illinois, and they talk different. Ever been there? I don't know. I may or may not have, Margaret. But I hear you. I know there's dialect changes throughout the country for sure. Lewis says, Happy New Year. Thank you for that, Lewis. Mark says, hope you're okay. Can't blame COVID for my mental capacity. I hear you. But yeah, no, if I have it, I have a relatively mild case of it. So I feel like there's no need to cancel today for sure. And I'll feel even better tomorrow. All right, let's get moving forward here. I do want to remind everybody, trading futures options and futures involves substantial risk of loss not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, also an equation for risk. So be careful, only fund your futures trading account with risk capital. My personal definition, money I can afford to lose doesn't lengthen my retirement horizon, doesn't change my lifestyle, and doesn't overly stress me out. That's my personal definition. Everyone's unique and different. I understand that. But keep that in mind. Easy with the day trade margins. We're going to be trading using a real-time practice account, real-time data on a simulated live account with NinjaTrader today. And I do have a PowerPoint, but we're going to start without the PowerPoint. And then the PowerPoint's actually kind of fun. It's not totally boring. It's only kind of boring. Left good morning, Los Angeles here. I actually like Los Angeles a lot. My wife doesn't like it, but I like it. I enjoy myself there. Paulo, don't worry, Jim. A few years ago, I was used to say to my daughter, stay off negative people. Last year, stay off positive people. I hear you, my friend. Anisha, good morning. Nice seeing you too. 2022, could you believe it? You know, I have the Micro Crude Oil. This is, all right, so for those of you who don't know, this is the NinjaTrader trading platform. I have a control panel on the upper left. I have a Superdome or trading ladder on the right. I have a quote board on the far right. And I have a chart in the middle. And I'm just looking at the Micro Crude Oil contract right now. This is an intraday chart. I queued up this is a relatively new contract, so there's not a lot of historical data on it, but there's enough to be dangerous, right? And this is a Micro Crude Oil February 2022 daily chart. And as you can see, it charts nicely. What I mean nicely is it trends nicely, and then every once in a while there's a big price dislocation like we saw on Omicron Friday. And then it kind of got its legs back underneath it and it drove it back up. And this is a supply and demand market, right? This is crude oil. This is a commodity. This is a physical entity, physical deliverable entity. Micros aren't deliverable, but the classic big one is. And it's, you know, a universal product, right? This is a product that's used throughout the world in a big way at that. So from a charting point of view and a technical analysis point of view, it's a really nice market, and it's a market that has a specific focus, again, supply and demand. And we'll talk about what some of those factors are as we go forward today. But it's relatively popular with respect to retail traders as well as institutional traders and commercial traders. So in any event, just wanted to point that up. I mean, last year we had negative prices in crude oil. It was crazy. Now we're at $78 and holding. Looks like we have a double top up around 84. Give approximate double top up around 84. And then now we're driving back up, right? So now I would say I'm bullish in this market right now. Just look at the last 7 or 8 days and just look at the green candles forming up here right now. Not very scientific method that I just described, but it's true. So I mean, I'm just gonna tap some of the bottom wicks and draw a blue line there and say, all right, the trend is up. Looking for places to buy in this market. So that's not always the case. Sometimes you're looking at places to sell in this market. But one of the beauties about futures trading is you could buy or sell. It doesn't matter. Whatever your opinion is, you could express it. So this thing's relatively new, like I just talked about. Ranjan says, good morning and Happy New Year. Thank you. And same to you. Launched in July 12th, 2021. And this is kind of the, the CME's been doing these micro products, right? And they have the same basis of the classic products, but they're smaller size contracts. And, we had the stock index ones that popped up. We have gold, we have currency, we have Bitcoin, and now we have micro crude oil. It's 1/10 the size of the regular CL crude oil contract, right? Same basis. It's the same basis, but it's 1/10 the size of the standard crude oil. So it's a smaller size contract. And so really what the CME is doing is they're making futures trading accessible to everybody. Now you could fund a futures trading account with hundreds of dollars instead of thousands of dollars, and express your opinion and participate in this type of investing and trading. And so it's been an ongoing process. The CME is doing this over the last couple of years, and this is where we're at right now. So great idea for the crude oil markets, especially in times of volatility when maybe from a risk point of view, a big standard size contract is too much, right? It's too much volatility, too big. So in any event, it's an option for you for sure. So what is crude oil? What's it? Naturally occurring unrefined petroleum composed of hydrocarbon deposits and other organic materials. Well, that's kind of like, that's like I don't know where I got that quote from. It's like, this is the Webster Dictionary definition of what crude oil is, and, a mainstay of our economy. So global benchmark crude oil products, and there's a couple of them, right? There's the one we're talking about here is the West Texas Intermediary Light Sweet Crude Futures. And the core symbol is CL, and the micro symbol is MCL. So when you see an M in front of a symbol, that just means micro. Again, for those of you who joined us late, a little under the weather today, so I apologize for my sneezing and sniffling today. I'll try to mute myself when that comes up, but apologize for that. So the West Texas Intermediate Futures is a CME Group product, and the sub exchange for this particular CME Group exchange is called NYMEX, New York Mercantile Exchange, which became part of the CME Group not too long ago. That's kind of the underlying exchange within the CME Group. Still traded on Globex, still traded electronically for sure, but you might see, oh, that's NYMEX crude. And you might hear that, or someone might say it in a chat or something like that. And this is sweet crude, right? It's sweet crude, and what that means is its API is less. So, and then its sulfur content is less. So it's characterized based on its chemical composition as sweet. Brent crude futures is another benchmark, I guess. And that one you could trade at the Intercontinental Exchange or the ICE Exchange. It's also a very popular market. It's less sweet. It's still sweet, but it's less sweet. The third kind of big major global benchmark is the DME OMAR. This is Dubai crude futures, basically, is what I would refer to it as. And it's at the Dubai Mercantile Exchange, and it's sour, right? It's sour, and the more sweet, the better from a refinery point of view, right? Because it's easier to refine into gasoline. It's easier to refine into other low sulfur components. So it's more desirable to get West Texas Intermediary as an example, just because it's cheaper. Standardized commodity contract, which means you're trading something that's not only traded on a transparent exchange, but it's a standardized commodity and a standardized contract. So it doesn't fluctuate. There's no changes between what you're getting in the product. Again, West Texas Intermediary, CL or MCL is a ticker symbol. It's delivered at Cushing, Oklahoma. This is kind of the delivery point for this type of crude oil. And there's this is kind of the hub really for the delivery. And, no one here is going to take delivery, of course, of crude oil, but, we're not going to show up at your house with, 1,000 barrels of crude oil and say, here you go. The micros isn't physically delivered anyway. But it is delivered here at Cushing, Oklahoma, the only place. We talked a little bit about light sweet versus sour. Sweet's easier to convert to gasoline. The micro crude oil contract, remember, is 1/10 the size of the crude oil of the CL, the WTI CL. I'll refer to it as the classic CL, the classic crude, right? Classic crude. So it's a 100-barrel contract per contract. That's the size of the contract. Just to put it in perspective, the average swimming pool is about 2 in the U.S. And this is a Google. I searched this on Google, so we know it's true. It's 238 barrels. So 2 in about a half contracts will fill up your swimming pool. Remember, 1 barrel is 42 gallons. Again, just to put this in perspective of how big it is. So a contract is worth 4,200 gallons of light sweet crude. And even to put it in more perspective, a bourbon barrel in the United States is 52 gallons. Now, it makes sense that the bourbon barrel would be bigger than the crude oil barrel. Of course, it's more important to distill more bourbon than than crude. But I thought that was kind of a fun factoid to throw in there. All right, contract specs for this: symbol MCL. Monthly contracts, remember, they roll over every month. So every month there's a new front month. Last trading day is the 4th business day prior to the 25th calendar day of the month prior to the contract month. I know that's a little confusing, but 4 days before the 25th, before the next month. 1 business day prior is to crude oil last trading day. And it's cash settled, right? So you're not going to get 100 barrels delivered to your door. Okay. More on contract specifications. 1 tick size. So each tick level, and it's traded in cents, right? 0.01 is the smallest tick size for this contract, and it equals $1. And remember, the large size or the classic size would be $10. So it's 10 to 1. Point size, then is $100 per contract, right? So it's 1 cent, and there's 100 cents in a point. So it's $100 per contract. Margins. So overnight margins, last I checked, and it may have been different. It might have changed since I did this PowerPoint, but it's going to be around or even exactly $561 per contract, as opposed to the larger size contract would be $5,610. So to keep a position overnight, you would have to have at least $561 in your account, right? So that kind of, again, it makes it more accessible for retail traders, not only to day trade, buy and sell intraday, but also to hold positions past the close. And remember, these are 23-hour markets, and the close is only 1 hour long, from 5 to 6 p.m. East Coast time. But you still have that overnight requirement that the exchange is set for holding those positions. If this, I haven't checked again, this today to see if this has changed. These slides are a couple weeks old, but it wouldn't have changed that much. It probably hasn't changed at all. So overnight, again, you could find it. You could look it up on the CME Group website. It's $561 per contract. Typical day trade margins are $100, which varies between FCMs and brokers. But this is kind of a typical. You get a discount for day trading margins. And remember, margins are a double-edged sword. They work for you as well as against you. They magnify both gains and losses. So be careful with over-leveraging. But again, this is a good example of, hey, now I could participate in this market, and I can express my opinion either long or short on whatever time frame I want with a more capital-efficient investment in my account. Margaret came to my rescue. Thank you for that. Officially co-presenter of the day. Margaret says overnight margin is now $643.50. So yeah, again, the CME will change them every once in a while, not all the time. The brokers don't seem to change them all that much. Laffa says my broker margin is $1,000, so that would be for, well, I don't know. I mean, again, each broker that has a different risk parameters and changes things around, but typically for a day trade, you're at $100. And I've seen them as low as 50 actually. But so this is a new product, and so it begs the question: really, how is it becoming popular? Is it becoming less popular? Is it tradable? Is there interest in this, in the micro crude, the MCL? And so I just cut. Again, this is couple, this is old. I should update this slide. Jim, you should update the slide. And this just shows, there's a histogram bar of daily volume from October and November. And, which is greater than 70,000 per day, which is pretty good. I mean, in my mind, generally, when you're over 50,000 per day, or even 40,000 per day, then that's a liquid market, relatively speaking. It's not as liquid as maybe the E-mini S&P or the 10-year notes, but it's tradable in my opinion. And the notional value of that size at a $70 price is going to be close to $500 million. So that's a lot of notional value. Oh, you're talking about the big crude. Okay, that makes sense. Yeah. So if your big crude margin is 1,000, then your micro would be 100, right? 1/10 the size. Okay, so how does this thing work? How does it move around? The markets are like a river, right? The prices are always moving, and we talked earlier about this being a supply and demand market, mostly a supply market, but supply and demand is number one. It's a factor that affects the next price. How much is in production? How much is in storage? And how much is being used? Right? We saw with COVID. We saw that demand go way down, right? So we weren't flying in airplanes as much, and we weren't doing something. We were staying home. We were making puzzles and and learning how to cook is what we were doing. So that the demand changed. Production, there's a drill rig over here on the right hand side. And by the way, I was in Tucson. I drove through Texas to get there last week. And these things are, and then I got to, and even in Arizona and New Mexico, these things are all over the place. You see these little guys, these little mini, I don't know what you call them, but drill rigs or pumps, literally all over the countryside still. So, but production is a big thing, right? So, we're drilling conventionally, we're fracking, we're doing all this stuff to get more of it. Consumption, well, that's on the demand side, right? So how are we, what's our demand? How are we using this? We have all sorts of alternative energies initiatives coming up, and electric cars and all that stuff, but consumption is a big part of it. Import export also affects light. Remember, it says MCL. This is the Texas West Intermediary crude, and there's competition in that, right? We input, as a country in the U.S., we import and both import and export crude oil and refined products, and that's going to affect price as well. And then the U.S. dollar, the value of the U.S. This is crude that's priced in U.S. dollars. And U.S. dollar on WTI crude, historically the price of oil is inversely related to the price of the U.S. dollar. That's not quite so true anymore. So this is historically kind of a convention, but we'll see periods of time like now where it's maybe not quite as inversely related as we thought. But a barrel of oil is priced in U.S. dollars across the world. When the U.S. dollar is strong, you need fewer U.S. dollars to buy a barrel of oil. So that's kind of the idea of that. But again, the import-export status has changed with the frackers and there's other sources of crude oil that we have. So that's kind of shifting the balance a little bit. No, the U.S. has recently become a crude exporting country. This is a new thing, and that's why you see maybe a little bit of a change in the relationship between the dollar and crude oil. This is kind of a cool chart I found, and I pulled it off of a website that's run by the Energy Information Administration, EIA, which is basically a department or a division of the Department of Energy here in the US, and they track this stuff in crazy detail. And if you go to the EIA website, you could spend days, if not longer, just reading all the reports and looking over the statistics. It's very data rich and graphically presented very well. This is one of the US government's better displays of data on a website that you're going to find. It's really a nifty thing. And again, Energy Information Administration does all this. But anyway, so I pulled this graph out. U.S. production products consumption by source and sector. And you'll see we got motor oil, not surprising, motor gasoline, 44%, the largest piece of the pie there. Distillate fuel is next at 21%. Hydrocarbon gas liquids, 18%. Jet fuel and aviation gasoline, 6%, and then others, 11%. On the left-hand side, total 18.1 million barrels per day. On the right-hand side, in a sector percentage, we have transportation, 66%, industrial, 28%, and residential commercial, only 6%. And so the interesting thing is on the transportation one, it's like, where we have, situations like we're experiencing now with COVID, or at least with the first wave, and to a lesser extent with the second wave, where transportation's been affected by this, which means demand has been affected. LAFTA says the EU will introduce as law a black box to be in all vehicles. Government will track us better. Black box like in an airplane? Well, they could track me all they want. I pretty much drive to the grocery store and back, and my life's not that exciting. So maybe I could kind of slow down their analysis with my boring life. So here's some links that are kind of important. EIA Weekly Reports. So there's a weekly inventory report released, and there was one today released by the EIA, and there's the link for it. I'm going to cut and paste this into the chat boxes, and if I can, whoops. Let's see, it's not going to let me copy it. So what I'm going to do is I'm going to copy it this way. I'm going to copy the link in the Zoom. And I'm going to cut, and I'm going to ask Isabella to cut and paste the Zoom link and put it into the YouTube and the Facebook link, so everybody could get a copy of that. It's every week this comes out, and here's what it looks like. It's pretty cool. I mean, there's, again, you can geek out on this stuff like I do, or you could not. You could just read the overview, the weekly petroleum status highlights overview, and there's a refined report that comes out in about a half an hour. But the and it kind of just says, hey, here it distills, no pun intended, the data, the data that's generated in the report. And it just talks about, crude oil refinery inputs averaged $15.9 billion per day, which was 163,000 barrel per day more than the previous week's average. So these are all kind of stats that you can compare previous weeks to, and even months and years going back if you use their website pretty well. Refineries operated at 89.8%, and gasoline production decreased last week, averaging 8.5 million barrels. So all this information traders kind of assimilate and decide, what is this going to be bullish or is this going to be bearish with respect to crude oil? Is it going to be a short-term bullish or bearish? Or going to be long-term bullish or bearish? So all of this stuff is traders look at from a data point of view. And then once you get into the balance sheet here, the U.S. petroleum balance sheet, then it breaks stuff down into categories. I mean, in states and strategic reserves and all sorts of stuff. So a lot of good reports here to mess around with. In any event, sorry about that. That was rude. I'm going to try to do better. Left is asking about pipelines being shut down. I don't, this has been the pipelines from Canada and other places has been a kind of a political hot potato for many years. And, it's one of those things that you could take a position on either side of it, but at the end of the day, it does affect supply, right? It's going to affect supply here in the U.S. It might not affect supply in Canada or that crude going somewhere else, but for sure that's a factor in supply and demand, and something to keep that traders will look at and say, okay, this pipeline just got it wasn't approved, or it was approved, and so that's a great comment. And Richard says rig counts come out on Fridays. That's right. So Baker Hughes has a rig count. Let me just kind of show you what he's referring to. That's widely followed also. Let's just see if it's on the Econo Day calendar for this week. And it's 1 p.m. Eastern time, and the Baker Hughes rig count is something. It's important. Every Friday, this information comes out, and it tells us pretty much it tracks the changes of the number of active operating oil and gas rigs, and that number changes and moves around. And you can see kind of last week, North America had 676, and U.S. had 586, the Gulf of Mexico 15, and Canada 90. And so they track this every week, and it kind of also could help with on the supply side of the equation, right? So you can kind of track the trends there by following the Baker Hughes rig count. That comes out. So that's a great comment too, as well, on that. I should add that to my slides. OPEC, here's an OPEC link. And I don't know if I could actually get it to open, but in any event, this is OPEC plus, right? And they have meetings, and they try to control price targets with their, with how they release their supply and how they generate their demand. And it's a big deal, right? It affects crude oil prices across the globe. Remember, crude oil is competitive, right? People, institutions, and entities, they have to decide on where they're going to buy their crude. So this is also a big part of the supply equation, and they have regular meetings as well that come up with policies and stuff like that. So that's something you get to keep track of also. Twitter community, if you're a Twitter person, I'm a huge Twitter fan, just to kind of fight. If you just follow the legitimate people that you want to follow, sometimes you do get a lot of good information. The Twitter handle for energy is hashtag OOTT. OOTT. So yeah, that's something to follow. That's pretty. I follow that. We talked about competition a little bit. We got domestic alternative energy information, clean energy. I was surprised I didn't see more solar panels in Tucson, Arizona when I was there this week, but I'm assuming there was some pretty big solar farms out there as well. I mean, you got sun all the time. You got international coordination and goals, the Paris Accords. We're going to reduce emissions by X, Y, and Z by 2030, by 2040, by 2050. So this is creating competition for burning coal and for other types of energy production, which is a negative CO2 contribution to the atmosphere. Reasons to trade MCL: low capital requirement. We already talked about it. Liquidity, decent liquidity, 23-hour access. You could express your opinion in this market from a day trading point of view for 23 hours a day, starting Sunday night at 6 p.m., going all the way to Monday evening, 5 p.m., with a 1-hour close. And then Monday night to Tuesday, the cycle repeats all the way through Friday. So you have that ability. And why is that important? Well, don't forget, the crude oil prices this is a global phenomenon, right? So there's events that happen outside of regular trading hours in the U.S. that could affect this. That now you could express an opinion, get out of a position, change a stop loss or a profit target, and react to scenario or information that happens after 6 o'clock Eastern time, or whenever the regular trading hours are over. So that's kind of an important thing, I think. Global benchmark, like we talked about, this is everybody follows this, right? And which means pricing is tight. when you have a lot of market participants following and engaging and investing in a benchmark, let's take a look at the S&P as an example. S&P 500, everyone's watching it. A lot of folks trade it. A lot of folks invest in it. And it's something that's a global benchmark. And that keeps pricing, I think, more, I wouldn't say legitimate, but tighter and more reasonable from a technical analysis and fundamental analysis point of view. Transparency, when you're trading these at the CME group, it's first in, first out on your trade. And this price ladder that shows the pricing and the bids and offers in the actual ladder is going to, it doesn't matter where you're located in the world. I mean, you could be in Japan, you could be like we have friends in Israel here today. You could be in the Middle East, you could be in China, you could be wherever you're at. You're going to see the same thing. It's transparent. There's not an ECN that these trades are routed to, or this data comes from. There's not a hidden pool. There's not. It's one play. It's one electronic exchange with one set of bids and one set of asks and one price, right? So when I say transparent, that's what I mean for that. And trades are entered on a first in, first out basis. And what do I mean by that? Well, for instance, if I wanted to sell a contract here, let's just pick a price at 78.45. You can see there's 4 contracts in front of me that are already there at the CME group. And by sending an order, then I would send a limit order at 78.45, and I would be the 5th contract. I'm in line, right? And then there's a 6th one. Someone just popped in there behind me. So I'm in line, and if the market trades up here at 78.45, as the 4 in front of me get filled, then I'm the next in line, and I have a chance to get my fill. That's what nobody could jump in front of me, I guess is what I'm trying to say. So anyway, oh, there we go. Let's take a look at the platform. So let's take a look at the platform. Going to the questions. Loftus says the Dow is very strong today, at least stronger than in the S&P. Well, we talked about that in our live trading event this morning. I don't know if you were there or not, but we talked about that very phenomenon this morning, and we're going to talk about it again tomorrow at the 10 o'clock live trade setup event. So feel free to come to that. Okay, so let's take a look at just kind of this is an odd time of the day to maybe trade this market, but only because it's lunchtime, right? It's 12:30 here in the East Coast, and I think price action will pick up a little bit more maybe toward the close today, which is in a couple of hours, but that's okay. Let's take a look right now. And I just have a 10-minute candle chart up here, pretty basic. I have an oscillator underneath here called the Commodity Channel Index. It's just an oscillator. You could have any kind you want. I mean, whatever oscillator you choose. You might choose RSI or MACD or something else. I like the Commodity Channel Index, and it oscillates around a 0 line. Most oscillation and has a high band and a low band, and most oscillators do the exact same thing. It's a delayed indicator. I have a moving average cross. My fast moving average is a 6 period. My slow moving average is a 26 period. And looking for convergence and divergence, and kind of give me clues on price, potential price momentum. On the left-hand side, I have my volume profile. This is tracking volume since we opened yesterday at 6 o'clock Eastern time, all the way till current, what's happening right now. And the longer the histogram bar, the more volume traded at that price. And that's kind of what it shows me. Now, this particular profile is a little odd in that it's not a regular bell-shaped curve or Gaussian distribution. It's the value area here is weighted toward the bottom, and what the value area is one standard deviation of volume. It's highlighted in dark blue. Light blue is prices above value, and then the point of control is where the most volume traded today, and that's at 76.82. And you can see most of the volume traded this morning there, right? Or early morning, pre-market is when it traded there, and we kind of broke out of that channel, and now we're trading substantively higher right now. So this is kind of how I would do analysis right now. I would add a Fibonacci retracement to this particular chart, and what my retracement fib would look like is I'm going to go ahead and pick a low Let me get my crosshairs out and go to a high. And then I have fib lines. So I have, so I have volume profile, I have oscillator, I have moving average cross, and then I have my my fib line. And the only last thing, the only thing I have to do before, when we already talked about that a little bit, in front of this is to determine my bias for today. And my bias today was typically, I believe, bullish, right? So there's my trend line, and we already talked about that. So what I would be doing here in this case is looking for areas to buy or to go long. And right away, an area of interest for me is the top of the value area and that 23.6% retracement level. So what I would use I could use my trading ladder, or I could do it from my chart and just right click and place a limit order to buy. So if we kind of broke, we kind of retraced back down, I would like to get long at that particular position. I'd like to buy a contract at 7805. Will the price get there between now and when we're done with this webinar? Maybe not, but this would be my trade idea for this particular market, with the stop then right down here by yesterday's high, which is south of the 38.2%. And that's the other great thing about where this is located is it's a few ticks below the low of that benchmark candle right there, that dominant candle. Even though we had an equal and opposite, we still had that dominant candle. Okay. I'll have to thank you for coming. I appreciate the comment. That's very kind. So VWAP, Richard asks, how well does volume weighted average price work with MCL? I think it works as well. I think it works as well as anything. Let's just go ahead and make another chart with it. What did I just do here? Okay. So I just created a new tab, and I'm going to right click, and I'm going to go ahead to go to my indicators to take a look at Richard's question. And I'm looking for order flow VWAP, volume weighted average price. I'm going to add it. I'm not going to make any changes to it at start. I'm just going to hit apply and OK. And what this does is it creates these bands, right? So the VWAP is the volume weighted average price is this green line, right? It's going up, so it's green. If it was going down, it would be red. It's in the middle. And then you have these deviation bands. You got one standard deviation, that's the darker blue. You got two standard deviations, that's the lighter blue. And you got three standard deviations, which is the really light blue. And so traders use these bands to kind of come up with trade ideas, right? And as an example, somebody might say, hey, if we approach the second standard deviation band, then I want to go short. Or I don't want to go short until after we breach or go above the second standard deviation bar. That's an example, right, of a trade idea. Let's go back to 5 o'clock in the morning, where we were at the low and we were trading at the bottom of the second standard deviation band. We breached it, and if you would have went long here, you would have had a good trade probably. So my answer, Richard, is I would use it in conjunction with everything else. I think this is this is a different technical analysis technique, but I think it's a really good one. And that's a great question. But so my answer is yes, it could be helpful. And I would kind of really focus on that second standard deviation bar most of the time. This line right here, this one, and then down here it would be down here. That would be my focus. Doesn't always work. I mean, when short here, you would have probably lost money at 9 o'clock this morning. So, but sometimes it does. And just like any of these types of indicators or momentum indicators or whatever you're using, oscillators, they're not 100% foolproof, but it gives you some trade, some input into your trade idea. Fred, this is a 10-minute. These are all 10-minute intraday, 10-minute candle charts that I'm using, with the exception of the daily chart I showed earlier to develop my bias for the day. Margaret says, looks like Bollinger Bands. Yeah, very similar to Bollinger Bands. The equation is a little different. It's actually a lot different, but similar idea. Similar idea. All right. What time is it? We got 12. We got some a little bit more time left. So feel free to type in any questions you may have or any ideas or comments. Fred, so here, okay, so Fred says, but not U.S. equities regular trading hours. No. So remember, these are 23-hour markets, right? So today's session is as odd as this is going to sound. Today's session started last night at 6 p.m. Eastern time, and it went continuously up until now, and it's going to continue to go continuously until 5 p.m. this afternoon. That's the session. That's in futures. There's no regular trading hours. The regular trading hours is 23 hours, right? As opposed to maybe stock market, which might be open, that has 9:30 to 4 or whatever their regular trading hours are there, right? And then you get into their extended trading hours and blackout periods and all sorts of weird stuff, which makes it harder for people to participate around the clock. So that's one of the benefits here for sure on the futures trading side. And so when I do my analysis, I want to see what happened last night, especially in crude oil. This is a global commodity. This is a benchmark commodity. So I want to see what what happened at the Asian Open. I want to see what happened in the European Open. I want to see what happened pre-market. I want to see the whole field. I want to see the whole playing field. I don't want to just say, oh, what happened since 8:30? Well, okay, I can see what happened since 8:30 by looking at the chart. Put my, 9:30, sorry. So anyway, I don't know if that answers your question, but that's how I look at it. It's just personally how I look at it. Okay. Again, though, follow up with questions if that didn't make sense or I misunderstood the particular question. So that's another good question is there are other energy markets. Natural gas is another one, and the inventory number for natural gas comes out tomorrow by the EIA, the Energy Information Administration. They'll release the natural gas number tomorrow at 10:30 on Thursdays. So that's something that's also a very tradable. Low sulfur gasoline, another one, is also very is a popular market as well to trade. So there's many different energy markets that you can consider in trading futures. Most retail traders focus on the crude oil, and the crude oil, the micro crude oil, there's certain advantages, right? So the ability to scale in and scale out of positions is an example. Let's say that I want to scale in. So let's say I would like to buy contracts at certain levels to create a multi-contract position, right? So in the example that I have right here, if I were to get filled on this contract here at 33, and then again at 34, then again at 05, I would have 2 units. I would be long 2 units, right? Or 20% of a classic crude oil contract, right? So one of the advantages of the micros, in my opinion, is to be able to scale in to a fractional position. Think about fractional shares in equity in trading stocks, right? You could trade fractional shares now, right? You don't have to buy a whole share of Apple. You could buy 20% of Apple if you want. Think of it the same way in future with the micros. Now you could participate and have it. You could cost dollar average into your position. And that might be something you may or may not be interested in. If I did a third unit there, then that would be 30% of a contract. Make sense? So the micros themselves give us more flexibility, typically, depending on your, how much you capitalize your account with, to go ahead and participate in these markets. Richard says London Open is good for early birds. Yeah, so if you're in the U.S., depending on what time zone you're in the U.S., maybe you're up at 2 a.m. Maybe you have a new baby. Maybe you're a new parent and you can't sleep. So that's what I did. I remember when my second son was born. He didn't sleep a lot, so I always found myself feeding the baby at 2 in the morning and trading British pound currencies. British pound sterling versus US dollar, because UK was open. So that was that's a funny comment, by the way, for early birds. But I was like desperate to do something other than feed a baby. All right, so let's take a look at what happened here. We just got a position. We bought a contract, and at 34, at 20 to 34, and you can see we're up $1, right? We're up $1. If this were a classic, it would be $10. That's mark to market, right? So as the price moves around, that's going to change. So I'm going to freeze my price ladder. So now we're down $3, right? So the brown area here is where this brown highlight is where we bought a contract, and the yellow is where the price is trading at right now. That's where the last buyers and sellers did a deal. And looking looking up at my intraday margin, that's $300. Remember, I said, well, wait a second, Jim, you said $100 per contract for the micro crude, and that's true. But when you talk about intraday margin or day trade margin, you talk about the potential. So I'm long 1, I have the potential of being long 2, and the potential of being long 3. So as long as these limit orders are in the book, it's going to add it to my intraday margin total. So that's why it's 300 instead of 100. 1, 2, 3. However, my intraday margin, as far as the CME goes, is still only $643.50. And now we've confirmed what Margaret has said, that I only have one, long 1. I have one position on, and my intraday margin I'm using is $634.50. So I have excess margin to continue on in the sim account. My cash value was $10,640 when I started. Lost $89.50 earlier today. Now we're down $5 mark to market on our unrealized P&L for the trade that we have going on right now. That's how that part of the platform works, and that's how you kind of add your realized P&L with your unrealized P&L to get the total. Any questions on that? Awesome. Oh man. All right. So anyway, 12:48. Been going at it for about 48 minutes. I do want to thank everybody for coming. I do also want to remind everybody trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, and although that could be an equation for opportunity, also an equation for risk. So be careful. Only fund with risk capital and easy on the day trade margins. Any other questions, ideas, things you want to talk about? Type them in. From a scheduling point of view, I'll have Isabella cut and paste this in as well. We have a couple of events coming up. More than a couple of events that are coming up. And I'll pull over the training page. We have our live trade setup event as usual tomorrow at 10 a.m. East Coast time. It's a lot of fun. Recommend you come to that. And then Futures Trading 101. If you haven't traded futures before and you want a better understanding of the history, how bids and asks work, how contracts work instead of shares and all that stuff, the benefits, take a look at that. Take a look at that again. And then we have some other stuff about NinjaTrader, discover the power of NinjaTrader, all of this stuff, introduction to order flow, order entry and trade management, charting, and additional trading as well. So this is the sheet. Isabel just cut and paste those into the chats. And next week, it's going to be different, especially the get started with futures ones are going to be different next week. So that will be updated, I think, Friday afternoon. Richard says Dow is shadow market for crude. Well, a lot of times the Dow and the crude do march in the same direction. And you could just kind of take a glimpse right now. Crude is up $1.28 today, and the Dow is up 96 today. And that makes a certain amount of sense, right? Because of the relationship between the blue chip stocks versus as opposed to tech stocks, right? Blue chip stocks are different than tech stocks, so they are gonna have a different correlation to the to crude oil for sure. But that's a great observation. Follow that link, the page I just had up for the this one right here for tomorrow anyway, live trade setups. Trade setups in the E-mini S&P. We do more than, I got to change this title. We could do crude, we could do NASI, we could do anything. So that's tomorrow at 10. This is the one. So just click on that that one, and you'll be good. Simple Cash Offer says, so the micro for crude is available on NinjaTrader. Yes, it is. It's available right now. Just call it, you know, the support folks, and they could add it to your. And it's pretty much going to be available on any brokerage firm that you use. So it's been around since July. That's, you know, it's no longer really brand new. It's relatively new, but it's not, you know, brand new. And it's traded in sync with here. Let me just show you one more thing before we let you go. I'm going to duplicate my trading ladder here. I'm going to put the regular crude oil market. When I say regular, I mean the classic side by side. I should have done this earlier. And you could see by just looking at the two price ladders that the prices are tracking exactly the same. I mean, they're 100% correlated between the classic and the micro. Remember, the basis for these contracts is the same. So pricing, the transparent pricing is going to match. Now, there might be a nanosecond or millisecond or whatever where it's a little bit out of whack, but because of the algos we talked about earlier and the market makers and the participants, that arbitrage spread will be eliminated nearly immediately. So keep that in mind. Classic on the left, and from a bid-ask point of view, they're pretty similar, right? So bids in the, oh wait, this changed because these are, oh, hang on a sec. I got to start this whole thing over. I had them linked. My bad. My bad. Let's unlink them. All right. So now you can see prices are pretty similar. Again, these will be 100% correlated by the end, and bids offers are a lot less in the micros, so they're in single digits instead of double digits. That's something that's important. Limit orders to enter are best practices. Limit orders to exit are best practices if you can get out. And then market orders, you know, you are subject to maybe a little bit different bid-ask spread. Sometimes, you know, right now, let me freeze my dome here. You see that's two. It's 2 ticks, or $2 is the bid-ask spread here. Bid-ask spread here is typically 1 tick, which is $10. So that's it. Merits it merits interest here. In any event, that's all with that. Margaret says yes. Simple to Cash Offer says thanks. Margaret says, how do they do that? How do they do what, Margaret? I'm sorry. Add a little bit more to your question. So if you're talking about arbitrage, in a perfect arbitrage, you want to sell the higher price commodity and buy the lower price one at the same time. So effectively you're flat, but you're creating price action to get to a midpoint. If that makes sense. All right. Thanks for coming, everybody. I appreciate that. We'll be at it again tomorrow. Thank you for the thumbs up on the YouTube channel. Greatly appreciate it as well. We do these things all the time. They're all free. Feel free to come to any event you want. We greatly appreciate it. We'd love to have you. The more dialogue, the better. The more questions, the better. So love that you're here for sure. Mark says, I asked in the last show how to match up the MNQ and NQ. So okay, so real quickly before we'll switch topics here very fast. I'm going to just go ahead and we'll duplicate the DOM again, and the MNQ, and then the NQ. I'm going to put them both up here. The NQ refers to the NASDAQ 100, and the MNQ refers to the micro NASDAQ 100, and there's the pricing, and it moves around a lot. But again, you can see the prices are 100% correlated. It's just moving very fast. The bid-ask spreads are actually thicker in this case in the micros than they are in the classic. It seems to be more. The micros are they do move a lot, and there's plenty of opportunity in the micro NASDAQ. Okay, where were we? We're at the end. We're at the end. Thank you for coming, everybody, for sure. Appreciate it. And we talked about risk. We did all that stuff. I'm going to leave you with this. Be safe out there and be good to each other. Take care.